In today's video, I want to talk about the tips and tricks of getting into the stock market. Now, it's not about timing the market, but there are actually certain times and certain days of the week that you want to be aware of. There are actually certain patterns in the stock market. And I learned it the hard way. I've been investing in the stock market for about 20 years now and now generate thousands of dollars every single month from the stock market. And I want to help you out and shorten your journey from my 20 years to as little as less than 10 minutes in this video today. Hey everyone, I'm a Canadian YouTuber that's been investing in the stock market and in real estate for the last 20 years. So I love talking about investing in stocks, investing in real estate. So if you are plateauing financially and want to create more passive income to grow your income, build your wealth, and ultimately live your best life, then you got to subscribe to my channel. So let's get back with the video. Okay, the first tip is Madness Monday. Have you ever noticed that the stock market goes a little bit crazy on a Monday? It's because the big news, the big bad news, they happen over the weekend. There's some political event that happens. There's some tsunami that happens in another part of the world. There's like earthquake. It happens, over the weekend, and then something happens on Monday where the market just reacts to that news. And usually the first few hours are like some red in the market. I would say Mondays, if you're looking to buy a high conviction stock at fair value, Monday is one of your days to look at. So be on the lookout for Monday, Madness Mondays. The second tip is called witching hour. What's witching hour? Have you ever heard of that term? Okay, this is like stock market jargon. Like back when I was starting out investing in stocks, I was just like, oh, so overwhelmed with this jargon. And one of the jargon is witching hour. Happens that witching hour is really the first trading hour in the stock market. See, because you're watching my video, I suspect you are a long-term investor. This is what my channel is all about. It's long-term investing, okay? It's not about day trading. But for those who do day trade, did you ever notice the first hour is chaotic, okay? Everyone who are day traders or big institutions, they're all like chaotic first thing in the morning. And the first hour, the market is crazy, okay? So I would say if you're looking to buy a high conviction stock, holding for the long term, don't buy first thing in the morning, like the first hour, because that hour is like humongous volatility. There's gap ups, and sorry, there's no more stock market jargon. Gap up is like the stock just all of a sudden jumps up because of earnings the day before, or it gaps down, meaning it drops really fast down because of the earnings yesterday, like something happened in the news. All to say is that first hours when there's a ton of people trying to get into the market, and it's like crazy. Wait until the first hour. Wait until the market kind of settles down after the first hour, called the witching hour, settles down. Then you're going to start seeing what the stock prices are really at, because the first hour is always chaotic. And I always avoid the first hour of every day when I decide to buy stock or sell a stock, because I want to see what the pattern is for that day. What is the actual steady price for that stock for that day? Now, the third tip, okay, this is just many years of making mistakes. This is why I'm like telling you to help you avoid the same mistake or less mistakes. The third tip is earnings. Okay, please, if you own stocks and obviously you're a long-term investor, that's why you're watching this video, the earnings reports, you got to know when they come out, okay, for stocks, okay? Because if you were looking to say buy more Apple stock or buy more Tesla stock, you want to know when earnings is at, because first of all, you should be watching earnings just to get a feel for what the stock is, what the company is doing. Also, don't buy a stock before earnings and expect the earnings to do well, and then you assume the stock is going to do well, because I think Benjamin Graham explains the stock market, but he thinks of the stock market as Mr. Market. He calls this guy Mr. Market. He's a maniac, depressive maniac, super emotional, gets super pessimistic and irrational, super irrational. So the stock market is very irrational in the short term. In the long term, it will definitely reflect the fundamentals of the company and reward companies that actually make money and do well and create revenue and have great management. But the short term, it doesn't really mean much. You can't tell a stock price and say that's what the company's worth. So all to say is that during earnings, same thing. If the company happens to miss earnings, it doesn't mean that well, usually it actually means the stock price will go down if they miss earnings. But if a stock all of a sudden does well during earnings, it doesn't necessarily mean that the stock price will go up, because a lot of it is sell on the news. Like that, you hear that term, sell on news, is because a lot of people actually know, or expecting that the company is going to do well before earnings, and the stock price would have already gone up before earnings, or could be doing nothing. All I'm trying to get at is do not time the market. Don't think that, oh, I'm going to buy just before earnings because I'm expecting earnings to go up and therefore the stock will go up and I'll make money. No, please don't time it. You buy stock because you have high conviction in the company. You buy companies that you know, buy companies that grow, buy companies that make a lot of dough, have great financials, low debt, high cash, makes a lot of money, revenue, makes a lot of net income, continues to grow year after year, and you'll be fine. But don't time the market. Don't time before earnings, because the earnings is volatile. So what I'm trying to get at is better if you're looking to buy high conviction stock that fair valued or a margin of safety, buy when the earnings settles down. Don't buy before earnings. Don't buy just after earnings. That's when there's a lot of volatility. Wait until the noise and the distractions and all that news just settles down. Another great tip is during earnings. That's actually probably the best time to buy a stock that you have a super high conviction in, because you've done all your due diligence and they happen to miss earnings, but long term the company is still running a great business model, is making a ton of money, is growing year over year. That short term kind of volatility where they miss earnings, like something happened or the CEO said something on Twitter and it caused the stock to go down. That's where you want to take advantage of that opportunity. So earnings is a great one where they happen to miss earnings because of some high expectations. And then the company announces, oh, we were, had some trouble like sending out like a shipment of iPhones and we missed the iPhone by like a smidgen. That's nothing. That's like super nothing in the grand scheme of it's a blip in the grand scheme of things. So this is where those are opportunities when companies actually miss earnings on high conviction companies that you want to hold for the long term, assuming you've done your due diligence and you know the value of that company and what is a good price to pay for that company. The fourth tip, okay, this is a tip that I've been actually saying, been sprinkling breadcrumbs throughout my video, is fall is fall. What does that mean? Okay, fall is fall. Typically in the fourth quarter of any year, and when I mean fourth quarter, I mean like the fall time, September, October, November, is volatile. It's like one of the worst quarters for the year, because a lot of the big institutions, the hedge fund managers, a lot of them will be selling off their stocks to claim and gain their profits. They want to ensure that they've solidified their profits for that year to collect their performance bonuses. So that time frame is usually super volatile. You're going to see some, ups and downs. It's just pretty chaotic. And actually, I'm just telling you that it's a pattern that plays out like almost every year that I've seen it, okay? It's just like a typical pattern that happens. So fall is fall. And also the other reason is the hedge funds and institutions, they need to rotate their portfolio. So they'll start selling their weaker stocks, or they'll lock in their profits from their very strong gainers. So they're going to rotate their stocks by selling off some and then buying different ones. And then that's why you'll see this change in the stock market. So that's why it's called fall is fall. And December happens to be also sometimes a very volatile December. Okay, just fair warning. Fifth tip, it's time in the market, not timing the market. Okay, if I explained this in my last video before, but I'll explain again. It's time in the market, not timing the market. Okay, so this is a really good example. Was last year we faced a mid-March market crash where stocks crazy dropped really fast within like 2 weeks to like 30-40%, sometimes 50% off its price. So it's scary. I know, like I remember buying stocks in February, and then of course some of the stocks didn't do so well in March, obviously, because I bought the stocks in February or January. And it's scary to see like your entire portfolio in the red. But please don't buy high and then sell low. reason why you're watching this video is because you are a long-term investor. You've done your due diligence. You've picked high conviction stocks that have great business fundamentals, that have growing revenue, growing net income. They're going to create more and more great products in the future. They have great management. So when you've done all your due diligence and you've really are buying a slice, a tiny, tiny slice in the company as an investor, because you are an investor, you are like a venture capitalist, like you're forking over money because you want to own a tiny slice in that company, then why would you sell a stock just because the greater stock market has crashed? Has the fundamentals in the company changed? So this is why I'm saying don't time the market expecting like, oh, the stock market's crashed, I got to get my money out, unless you obviously super need that money. But I think if you have full confidence in the company fundamentals, in knowing why you buy the company because you've done your due diligence, then shouldn't time the market and try to get in and out of the market. Or you actually want to time the market where you expect that the next bear market's going to happen. Like you expect the market crash is going to come down because you've watched all the news and there's lots of news saying, oh, the next market crash is going to happen this year or sometime in the next 2 years. And you start like selling all your stocks. That's what I mean. Please don't time the market. It's really time in the market when it becomes fruitful. It will, for sure, the stock market will always correct itself. It's going to go down, like we've experienced last year, and your stock portfolio will look red. But if you, like I said, if you bought high conviction stocks and you believe in its growth thesis and you know your reasons why, you've done your due diligence, then you should hold on to those stocks. Please don't time the market and try to like sell all your stocks just expecting that the market crash is going to happen, because you're trying to time the market versus timing the market. I can tell you in the last 20 years of investing, I've lost hundreds of thousands of dollars trying to time the market by missing out on holding high conviction stocks throughout all the stock market crashes. I would have made 10 times more money holding onto those stocks than trying to time the market and only take profit once the stock doubles rather than having it 10x. Hey everyone, are you watching this video and haven't hit that red button down below and subscribe? Why not? Okay, I am a long-term investor that's been investing in the markets for 20 years. And I'm trying to distill my journey to as little as like these videos, like into minutes for you. So if you're looking to build more passive income because you're plateauing financially and want to grow your income, build your wealth, and ultimately achieve financial freedom, then you got to subscribe to my videos because I love talking about stocks and real estate. Anyways, I hope to see you in the next video.